Madam, we can start. I think we have 10 because I have a back-to-back meeting schedule after this also.
Fine.
Start off
Uh,
from the beginning.
yeah, sure. Very good evening to everyone. On behalf of Odisha Corporate Foundation, it gives me immense pleasure to take you all to a very informative session that we are having today. This is on a topic which is of everybody's interest, and it is related to financial literacy. I think it was a privilege and honor to have with us one of the most eminent speakers that we have in the financial industry on the capital markets. Let me be pleased to inform you that we have Mr. Pramod Das, who is also from Odisha, and he has been ranked among the top best 40 speakers from Securities Exchange Board of India for talking on the subjects that we are. He is already has more than 18 years of insightful experience in the capital markets, and it gives us immense opportunity to discuss all the intricacies, the opportunities, and the potential that we have seen in the capital markets. Without taking much of the time, I would request everybody to please enjoy this enlightful session, and we would be definitely trying to inculcate the essence of vital economic sector and capital markets understanding. With this, we hand over the mic to Mr. Pramod Das to take us to the session. Thank you.
Ma'am, for the introduction. Primarily, as you would be aware, SEBI is having this week for investor awareness, and this is one of the initiatives which I'm working on. So I have this presentation for you today. So primarily, the need for financial markets and the instruments is what we're going to speak about. So the first part of it is how we go about it. Is when we look at the financial markets, it's like we have people who want to buy and people who want to sell. It could be stocks, equities, bonds, debentures, and for that we require a structure. The structure would have entities like the regulator. In our Indian markets, the regulator is SEBI. Then we have financial institutions who support this. As part of the exchanges, we have NSE and BSE. MSC was there at one stage but has lost on business. And on the clearing side, we have clearing corporations like NSE. We have National Clearing Corporation and ICCL, that is from BSE. Along with that, we have depositories. As we have moved from physical to DMAT, now we have depositories like NSDL and CDSL, which support the online trading and faster transfer of shares. Now we are looking at T0. And as Madam of Regulator, our chairperson of SEBI has said, we are looking at 1 hour settlement early next year. So that is what we're looking at. So just to give a brief, like if you see this description, there are people who want to buy, people who want to sell. But if you don't have an organized structure, how will you have the right price? And there's a concern on the risk on settlement. So where these settlement agencies come into place is when you have a bid and an offer. I am exactly speaking with an understanding that the audience today here has an understanding of the basics of the financial markets. So you will stop me if you have any clarifications to be sought at this stage. So if you would have an unorganized market like the open cry market, which was prevalent before, what would happen is we don't have clarity of the pricing, the ownership transfer, and the process was quite tedious. But post 1992, when the SEBI came into place, the regulations are put in place. So we're trying to give them more clarity of what is expected out in your transaction and real-time confirmations, validations of the margin requirements and processes are done here. So now I'll just go back to SEBI. It was formed as an act in the 1992. And as we have the acts for SEBI, we had also the Depository Act in 1996, Securities Contract Regulation of Act of 1956, and various provisions for the Companies Act, which are trying to work on 3 major things: developing the financial market, regulating the financial market, and protecting the investor key interest. So we can touch upon a lot of discussions out here, but my focus would be primary market and secondary market for today's presentation. So when we see, as we hear that this platform is for entrepreneurs and entrepreneurs are wanting to seek funds, they could seek their funds from the primary market also. But for that, they should have those financials of the last 5 years. And the last 5 years would be, I would request all the audience to be on mute until they have any questions to ask on this topic. So primarily what happens is you can raise money from local lenders. That is on a lower scale. But when you want to pick up large sums of money, what happens? You can't go to one person or two persons. Then your corpus required is huge. So then you reach out to the exchanges for raising money. But what happens is we have a profiling which happens. Like as you have a CBIL scores, these entities who raise money would have to have that type of caliber to use those funds correctly. So the regulator has put in place many entities in place before they come to the exchange for listing. There'll be a merchant banker who will come with the pricing, the timing for raising these funds. Then there would be an issuing bank who's the banker to the issue, and there'll be RTA, that is a transfer agents. And once you raise the funds, gradually over a period of time, they have to get it listed on the stock exchanges. The stock exchanges would have create an opportunity for you to sell and buy shares. So the issuer raises the funds, and once he has the funds, he can use it for his own business needs as per the objective which is put out in an RHP. But what happens after that is a secondary market. The secondary market is you and I, that is, individuals and institutions who have invested and see the price movement and see if the prices are moving as per their expectation at their level. They can sell those shares to their brokers. So now being in electronic form, you have to have a demat account, a bank account, and a broking account for the same. Now I'll run you through a normal cycle, what happens in the exchanges. So once you place the order through the exchange, either through online, offline, or now we have mobile apps which are there in the market, which have a sizable business model today. And there what exactly happens is you have to put a place of an order, either buy or sell. If you have quantities to buy, you put a buy order. If you have quantity to sell, you put sell orders. Once the quantity and price matches at the exchange platform, you get a message from the broker stating that this is the quantity, this is the price which has been traded. So they expect you to provide either the securities or the funds, as a case would be at that time period, if it is T+1 settlement. Now we have moved from T+2 to T+1 settlement. What happens is T+1 and T+2. T stands for trading day, and T day plus 1, that is today, that is assuming it's a Monday. Monday, if you do a trade, that is 9th of October, settlement happens on 10th of October. By 10th of October, at around 2:30, either you get your stocks or you get your shares. Stocks or you get your funds for your sale of shares. Then in that process, what happens? You have a trading entity, that is the exchange. You have the broker. You have the clearing house, that is NCL and ICCL, who clear your trades. They clear the trades in the sense they see who are going to pay for the shares and who are going to deliver the shares. Then we have the settlement. The settlement is the settlement guarantee. Why do we have a clearing corporation? Because they guarantee the settlement of the transaction, and it happens through paying of funds and securities and payout of funds and securities. So if you're buying shares, you have to pay in the funds, and if you're selling shares, you have to deliver the shares to the depository account, to the pool account of the clearing corporation. Now I'll go to some basic stats. I'm going specifically to this, so I would not take much time. I expect a few questions in this whole presentation. So if you look at the RBI data set, it's quite interesting. We say that the markets are increasing and people are investing, but in the latest stats, even now, we have a large sum of money being invested. It's around 35% in bank deposits and provident fund. So that's around 22%. Roughly around 47% of the savings is still with the banks and instruments by the government. So we have post that we have some amount which is going in share market, that's around 1%, and mutual fund which has grown over a period of time with the initiative by the regulator and advertising campaigns which are being pushed across, we are seeing around 8%, be it be SIP or lump sum amount. So that is the way we are looking at businesses to grow. So gradually this movement from deposits and PPF would move to the shares and the mutual fund. That is what we expect in the markets. But as a regulator, we want our investors to be aware of what they are investing in. You might get fake calls. You might be you may be given offers to buy shares at low price and you make some profits, but that should not be the case. Whenever you invest, think, act, and then do your investment, because your hard-earned money, and once gone, it's quite difficult to get back. So I'm coming back to my last slide today. That is think, understand, and invest. So I keep this open session for the next 5 minutes. And if you all have any queries, let me know, please. Thank you.
question, I think we can keep it open for the others.
Do you have any questions?
আমি তো অপারেশন করে ছাড় দিয়েছেন মায়ের নিচে ডাক্তার সেই সব মানে আজ সব কালে সব নরমাল ହେଇଗଲାଣି মানে এতে মেশিন ସବୁ ବାହାର
Madam, I
ନା
think there's no queries from the audience at this stage. So, are we good?
I think you have a query where a participant is asking about T+1. Has it been initiated, sir?
Yes, ma'am. T+1 is already gone live. It has happened in a phased manner. So the exchanges, we've been part of that initiative also. So it was in a phased manner. So we took illiquid stocks, then we got the liquid stocks, and then we got the highly traded stocks into the T+1 model. So all the stocks which are listed on the exchange, in the sense the F&O stocks were primarily focused on, have moved to T+1. And now we are working for January 2024 for T+0. So that is in the discussion and it is in work in progress.
So this would have an impact on the economy also?
No, ma'am, it's primarily to ease out the payments which are, it takes time to settle. So what happens is when you have transactions, previously we were saying T+2. India has got this milestone of T+1, which has happened this year. So there's circulation of money which is going to help at the end of the day. So you do a transaction today, end of the day you get the credit, which was exactly taking 2 to 3 days before. There was a T+5 settlement, T+3, now T+2. We're looking at T+0 in the early next year. And we're also seeing the market timing is increasing. In the sense, now we see the markets starting at 9:15 to 3:30. But the regulator is looking at getting the derivatives market up to 11:30. What is the case in the commodities market? So that is a possibility. In the near time, we'll get to see the markets being prolonged. Exactly, this is an initiative by the regulator because we want to touch base with other markets. So when our markets close, the US markets and other markets are open. So you give opportunities for investors to see those markets and try to see their positions, which is not the case currently. So now we currently have dependency on this Singapore Stock Exchange and then the Indian markets open. But gradually we'll have other markets also we can align with going ahead.
Okay, that means it's going to draw a lot of investors when number is concerned. Like as you just said, it is an investor awareness program. So we'll have a lot of investors pulling in to the system sooner or later.
Yes, ma'am. So primarily the initiative of SEBI, which I'm part of and working for, is to make people aware that it's easy to get trapped with ads and messages or tips, as you say, to make easy money. But before you invest, we request all investors to read through the details of their investments, because the stocks which are rising today, if you don't understand what is the reason, how it is increasing, if we don't see the profitability, their business growth, and we invest just for the easy money, it might lose a lot of your money. That is what SEBI is working on, and we are part of that.
Thank you, sir. You let us know a lot many things about the clearing corporation also. That also made us understand exactly how trade happens.
Yeah, ma'am, exactly. The clearing corporation plays a key role. What we look at the exchanges that we have done the trade, we get the payment. But at the back end, there's a clearing corporation. So even if it's an institutional trade or a retail trade, we have two categories of investors. The retail is like you and me. The institution is the LIC, GIC, UTI, those entities, and even the Credit Suisse and the Goldman Sachs. So those entities also have to settle their trades, be it be equity, derivatives, as the case would be. So the clearing corporation identifies the obligation, and also the settlement has to be done. And that is what we are talking about, T+1 settlement. So the settlement is done by the clearing corporation. The exchange only gets you the trade done, but settlement and getting of funds or the security is done by the clearing corporation.
So they have to maintain a margin for this when the trades.
Yeah, the brokers who want to trade, they can trade on their behalf, or they can trade to the clearing member. So this is a valid point here. The clearing entity, the clearing member is a member of the clearing corporation who clears trade on behalf of the trading member. So the trading member would only trade on the exchanges like NSE or BSE or MSE, as the case would be, or wherever the exchange would be. Previously, we had regional exchanges, but now businesses have gone down and there's a monopoly of only exchange, NSE and BSE. So what happens is the clearing member is settling the trades as compared to the trading member who only does the execution of the trade. So they punch in the orders for you either manually or electronically by providing their online platform or using their desktop-based application, and you are able to place the bids, and based on the matching of the prices, you get the trades happen. But post-trade happening, you have to either deliver the stock from your depository account or get the funds from a bank account. That happens to the clearing corporation, and there is a role of clearing corporation. Why do we emphasize on doing the trades through the regulated market? Is there is assurance of settlement of your funds and securities. If you do the same thing in an unorganized market, which also is prevalent and parallel to the normal structured market, there's always a chance of default of the payment of stocks and securities. So that exists, but that is a gray market, as I say.
Thank you, sir. Well explained, very informative.
If you have any other questions, we are good to close for the session.
Do we have any more questions? Do we have any more questions that we would like to take up from the audience? I think we can accommodate one last question if anybody has. Yeah.
In NSDL, how we hello, madam.
Yes, sir. Tell me.
NSDL, how to get this consolidated account statement? Some are, many are not getting on our mail. The CAS.
So you can go on the website, sir. You can go on their website and you have an option where you can put in these details. CAS is an option given to all of the investors without any charge. So you get a consolidated statement of all your holdings, not only your stocks, also your mutual funds and your insurance and all your investments you have done. So you can just search on the website of NSDL and CDSL and check for CAS. You can even type it on Google. You'll be able to navigate and the path is there. You put in your credentials, that is your key profile IDs, that is your PAN details and your email ID, which is registered with the depositories, which has to be mapped over there. So that is what is required when you open and get this map. It's a monthly mailer, I think, which you get this consolidated report.
Normally people used to get, but some are not getting, so that's a major headache. Okay, thanks. Getting. And one more thing.
Just to add,
Sir.
just to
Yeah,
add
please.
to what has been asked in the relation to cash, as Mr. Pramod Das has rightly said so, you can approach your respective depository participant also where you have the demat account. Many a times what happens is the client while opening the demat account does not insist they would like to have the consolidated account statement electronically. So in that case, it can be marked as not required at times. In case you're not getting it, you can definitely write into your DP or the depository participant. At the same time, even the depositories, that is NSDL and the other depository, where the demat account is held, they will accordingly they will receive the request and they will have it forwarded. But you must keep in mind that if it is in a quarter, if there's any transaction, suppose we are looking at the month of October, November, December, only if there are transactions happening for that quarter, you will get by default, you will get the statement being sent. Otherwise, they will have it sent to you as per the transaction. And it was very insightful from the point of what Mr. Pramod was also mentioning. It will give you an entire total classification on various type of investments you have, be it in the mutual fund, it be in the debt market, or even if it's in the equity side. So that gives you a very meaningful, insightful understanding of how your holdings are in the capital markets and how you can utilize for the same. I hope we've been able to address that concern, sir.
Yeah, please. NSDL, any offices within Odisha?
NSDL has a local office presence for the eastern region at Kolkata, but definitely you can write into info@nsdl.com. Alternatively, we will be leaving behind the email ID, and if you have the concern that you want, we will get you connected with the team member. They can help you out in the matter. But it is important that you approach your depository participant with whom you have the demat account. They will be able to fast track the request as well.
Done. And my request to Pramod sir regarding this KYC confusion. KYC actually very shortly so many restrictions imposed and people are getting stuck. And this CAMS and Carbhi, two agencies are there. Why it's not centralized single KYC point, and particularly KYC, everyone is interested for investing and everyone goes on investing. So while making a PAN, is it possible, practicable to open a KYC by default, so that there will be no easy going and the flourishment will be good also?
The regulator is working on this, sir, and the regulator has also initiated many steps for the same. So if you see, there's common KYC which is come in place. So there are key documentation which are required, and if you have that document either with your broking account or your mutual fund account, that can be referred to for your further investments. So if you still have a challenge, we have on the SEBI website investor concerns and grievances, also the scores, where you can raise your concerns if you're facing an issue. As you mentioned, that KYC is a challenge. Please share your learnings or your issues of pain, and we will try to see how we can address it. But it's all a learning process, and if you see the last 20 years, how SEBI has tried to evolve and bring KYC in streamline, that is a remarkable job which is being done. And we are working towards improving that. So you could please share your concerns on our website, please.
For this Aadhaar PAN link and likely, and if email updation is not there, then KYC is hanged. Likely transactions are banned. So the issues are all of a sudden it came out. So customer is not getting any call also or message. That thing is so there lies the communication gap. If someone interested for redemption, likely, so it's becoming a challenge all of the.
So I'll just take a minute here. What happens is the regulator is talking to the entities or participants of the market. It will inform the depositories and the stock exchanges. So the stock exchange inform their brokers, the depositories, that is NSDL, CDSL, will inform their DPs. So now it is the act of the DPs and the brokers to take it ahead. From the regulator point of view, they'll issue circulars. That is one part. But now if it downstream, if it's not being communicated, it is an issue with the party, with the entity which they are interfacing. So it could be a stockbroker or your depository. So they have to inform you because it's public information. The regulator is not here to hide information, but to share and make this information more transparent. So if this person or entities you're facing is challenging, I would request you all first to take this up with your contact depositories or your brokers. If you still have a challenge, please come to the
Immediate,
SEBI.
yeah, immediate service of providing authority, right?
Yes.
Okay.
Do we have any more
Thank you,
questions that
thank
we would like to address it by the panel?
Let's have a series to such similar online program so that we can involve investors at large. So participants can be more and more interactive and knowledge information sharing. Actually,
Yes.
reached, yeah.
Yeah, I think what today's session that has been arranged by the Odisha Financial Corporation, it is one of the endeavor which we would like to have done for the Odisha community. More importantly, we would like to have the education level enhanced in the financial literacy segment, and it is an immense honor for us also to get this hosted. Thank you very much, Mr. Pramod Das, for coming and sparing your valuable time. And we really feel that a lot of the people who attended today's program would benefit from this insightfulness that you have. Just before we conclude on a thankful gratitude note, for the benefit of all those who have joined in late, OFC will be conducting similar programs for getting the awareness levels enhanced. And we are very much grateful for the fact that OFC has reached out to eminent faculties and people of prominence who are experts in this domain area. We had a similar program organized yesterday for the women on the financial literacy, which was held by the panelists that we had, Mrs. Sushma Gautam Das, and today we have the privilege of having Mr. Pramod Kumar Das, who is actually also ranked best 40 speakers by SEBI in terms of his participation. He has been a prominent speaker not only for topics which are related to what you will have gone through and understand from the investment perspective, but more so also from the perspective on the capital market. And he has conducted multiple sessions also with NISM and on behalf of SEBI and NSE. I think with the kind of initiative that OFC is taking, we can definitely make a lot of difference for our wonderful state Odisha. And with this, thank you Pramod sir for making it for today's meeting. Dhanyavad on behalf of the entire team at OFC.
Thank you all. Thank you for your time. Have a good day.
Thank you everybody.